It's been quite a couple days for some typically poor-performing companies on the stock market, most notably GameStop. In a matter of a few weeks, retail investors managed to push up its stock by 1,700%. How does that even happen? Well, the short answer, Reddit. For a bigger explanation, we turn to Dr. Ani Mathers, Associate Dean of the Purdue School of Business at Salisbury University. Dr. Mathers, thank you for joining us this afternoon.
Thank you. Happy to be here.
So have you been paying attention to all of this? Because I feel like just in the past day or so, I've been seeing a lot of articles about GameStop stock.
Yeah, it has certainly caught people's attention. I've been watching it with some interest like everybody else, I think.
Yeah. So in a nutshell, what happened?
There were a lot of hedge funds who had taken short positions against GameStop. A short position is basically where you borrow stock you don't own and you sell it. And so what you've done in that case is you've borrowed shares of the company, and that means you owe them back. And so you're making a bet, essentially, that the company's share price will fall. And in this case, a number of individuals took to Reddit and decided that they wanted to punish these hedge funds for making that bet.
So what they put on Reddit was a call for people to invest in GameStop?
That's right. So they took a lot of positions on the other side, essentially, buying the shares of GameStop or buying call options, which is a little more esoteric, but also is a bet that the company's share price will increase. And collectively, all of these people's buying pressure pushed the share price up. And then what you get is a bit of a death spiral for the short positions, because they need to buy back these shares in order to cover their short position, basically to return those shares that they've borrowed. As the share price keeps going up, they start getting calls from their brokers about how they're losing money and they need to either return some of those shares or put up more cash because the value of what they owe is increasing. You know, now they owe more than what they owed before. And so if you're a broker, you want to make sure that you're covered, that, you know, that you'll receive what was borrowed. And so that just puts more buy-side pressure on the stock. These hedge funds having to cover their positions, having to buy back shares, increases the stock price even more.
Now, some have described it as a David and Goliath situation. Is it legal? I mean, did they do anything wrong? Is this stock manipulation, or what is it?
You know, that's the million-dollar question. If these were, if these were two or three other hedge funds or other, big traders, big banks who were collaborating to push up the price like this, to create what's called a short squeeze, then yes, that would be against the SEC rules. But I don't think the SEC rules anticipated so many individual traders collaborating in this way.
So, and some of those individual traders made some big money, but do they stand to lose out big as well?
Yeah, so from what I'm reading on this Wall Street Bets subreddit, it sounds like, there's a lot of pressure internally to not cash out, to keep holding these long positions, even though, yeah, like you were saying, a lot of people have at this point made big gains. So that is kind of an interesting aspect. There's certainly going to be these competing interests if you're a member of that group, to hold the line and kind of keep the Wall Street traders' toes to the fire versus making potentially significant money by selling your position. Right now, from what I'm reading, I think that there's a lot of bets on the other side that are coming up as well, where people are saying, hey, GameStop's at prices that make no sense. And so it's got to fall back down at some point, and there's money to be made there. And similarly, as you said, that, if that happens, if and when that happens, then those Wall Street bettors are going to lose all that money that they made.
It's an interesting thing, even to those of us who don't really follow the stock market. I guess how it ends is to be determined. Dr. Ani Mathers, Associate Dean at the Purdue School of Business at Salisbury University, thank you for clearing this all up for us.
Thanks for having me.